G'day guys, welcome to Basics 3. Today we're going to go through crypto cycles at the start, or basically Bitcoin cycle. We're going to look at and support and resistance trading. Bear with me, I'm riding solo with the baby today, so I might have to pause and sort him out a couple of times, but we'll get it done. Okay, so crypto cycle. Bitcoin goes in around a 3 to 5 year cycle. It has this big bull run you can see here that we've had. The last time it happened was in 2018. We have this decline, which is doesn't look very big now, but if you were in there were some pretty sharp drops and a lot of people lost a lot of money, and that's why I'm trying to make these videos before we get, well, I think, you know, we could possibly have topped out here already and we may be starting this decline. So I want to make these videos so it keeps money in people's pockets, because that's what it's all about at the end of the day. So we get this slow decline, we get a long consolidation, and then we start to amp up again. It happens over and over again. We can see it happened down here. We have the parabolic curve. It goes from slight curve to near vertical, crumbles down, bit of consolidation, we retest that consolidation level there, and we curve back up, blow off top, come back down, consolidation, start to run back up again. It's a repeating pattern in the market, and that's what they call fractals. It's a pattern in the market that happens over and over again. Doesn't necessarily have to be the exact same figures and look exactly the same as the last one, but as you can see, there's similarities between it all. Bitcoin goes up, everyone calls it a bubble, it's about to burst, you lose all your money, and it goes down. If it goes up this sharp, it's got to come down. We're looking, it's not a steady growth asset. It peaks and valleys its way up. So, next bit of information I'm going to show you. So, by the way, this green box here is my buy zone for Bitcoin. That's where I'm going to fill my bags of Bitcoin and walk away. And I'm about to show you how I got this 10 to 13k box and why. We'll go back to the start down here. Move the chart around. Alright, we use our measurement tool. We go from the top of that Bitcoin run to the bottom. What percentage did we lose? Around 83%. Alright, next one. We go to the top of that Bitcoin run all the way to the bottom. What did we lose? 86%. Again. Up to the top of that Bitcoin run, all the way to the bottom down here, and what do we get? 84%. So, if this is the top, and there's definitely arguments for that, where is that 82 to 86% on Bitcoin? Oh, green box. We might even go lower, but there's a lot of support across here. So that's my area. I'm looking for longer time frame reversal signals, consolidation there to buy for the long term. Until then, I'm pretty much trading. I may fill some like spot investing bags around this level, but ultimately, if it comes down here, I'm fairly well loading up. Right, so that's the crypto cycle. That's why I'm imploring everybody to just keep an eye on the charts, because those drops can be brutal, especially if you're in altcoins. Bitcoin like loses 80%. We go from 60k to 10 or 11. Altcoins can go from hundreds of dollars to a couple of cents. So if you have your holdings in altcoins, it's pretty fucking bad. Like Eth or Eth, as people call it. Let's look at the drop here from 2017-18. There's a 95% drop. There's another drop here. Only 70%. Like, Bitcoin looks big because it costs a lot and it takes up a lot of chart room. But a 95% drop on an asset is fucking huge. So, have your invalidation levels of where you're going to get out and protect your capital and money, and because that can be brutal. They're not like legacy markets. They're not gold. They don't fart around at a level for ages. Like, we're on weekly charts here, weekly time frames, right? So they take a while to play out, but like, where's a big week in gold? What do we get here? What's the percentage move there? This is in the middle of a bull run. We got a 5% move. In Bitcoin, that's a pretty big bar there on the weekly. Like, that's a 30% move. That's why we trade crypto, because it moves big, but it can go the wrong way quickly as well. So crypto cycles, just be aware. If we lose this level, markets are probably fucked. So, well, yeah, watch yourselves. Right, let's get into support and resistance. Markets have 3 stages that they're in, and we can denote that with my brush tool here. We have an uptrend, a consolidation, and a downtrend. Now, there can be all kinds of different versions of that. We can have an uptrend, consolidation, uptrend, or we can have a downtrend, consolidation, downtrend. Markets generally spend more time in a consolidation period than they do trending. And the best way to trade a consolidation period is through support and resistance, and it gives you the best and the second best entry for a trending market. Now, consolidation, this wiggly line part here, can be broken down into accumulation and distribution. We don't know which one it is in until it breaks and starts trending. But we can have educated guesses. So an accumulation is where people are looking to buy, like the big market movers, the guys with the big money, the big firms that are in. As a consolidation period, price came up, consolidated in an accumulation period. Sorry, price came up, consolidated here, while the big boys were filling their bags underneath at this bottom level, right? They're not allowing the market to come back down. They're filling their bags here, getting their stacks, and the market pushes higher and they sell up here for massive profit, right? Now we have distribution here, and I'll make this red. Get the brush, And now this is where the big market makers, the big money guys, have taken, maybe they've played this pattern out, they've accumulated and it's pushed, and up here where they're selling is this distribution pattern, and they're selling at the top here, right? Or maybe they're building a short position and they're putting shorts in at the top of the market here to take it down and take their profits down the bottom. So 3 stages of the market: uptrend, consolidation, and a downtrend. Uptrend, consolidation, downtrend. You can have a mixture of all of those. You can have a downtrend, consolidation, downtrend. You can have a downtrend, consolidation, uptrend. It doesn't matter. The consolidation period is either accumulation or distribution. We don't know which one it is until the market breaks on the trend. Right? And the best way to trade this area, which the market is in a lot of times, is through support and resistance. Let's get rid of all of that. Support and resistance trading is, just support and resistance in general, is probably the most basic form of TA. If I give you a blank chart and tell you to draw a line of where you think the roof is and where you think the floor is, you're probably going to be able to do it. And that's all we're doing, right? We're drawing roofs and floors. You call it support and resistance. I like to think of it as an apartment building. Let's see if I can find my shit drawing. Here it is. Right. What was once a roof in an apartment building, when you go up the next floor, turns into a floor, doesn't it? So price has gone up, hit the roof, rejected, bounced off the floor, gone up into the next floor, hit the roof, rejected, come back to the floor. So if you think of it, if you like to think of it that way, that's, and while it's in this floor space is the consolidation. So we have uptrend, we hit resistance or the roof, we consolidate down, we come to the floor or support. You can think of support as demand, because people will buy that price. There's demand for the price there. And you can think of resistance as supply. There's an oversupply of the asset at that price. We come up, there's too many sellers, there's too much selling going on Bitcoin here. We reject because sellers outweigh the buyers, and we come back down to where the buyers regain control over the sellers, and we push higher. So support and resistance, floors and ceilings. What was once a ceiling turns into a floor when you're above it. Same on the opposite. Which was once a floor, once you come underneath, right, now turns into a roof, ceiling, resistance. Right, that is the simple explanation for it. Charts make it difficult. They fake you out with candle patterns. They do all kinds of things. Let's look at some examples now. We'll start off with Bitcoin. So I give you this weekly chart. All you can see is this area here. I say to you, can you draw me some floors and ceilings? Where would you be looking? I like to start at the support or the floor, and I like to use the lowest point I can find on there where I think price is going to bounce from. So looking at this chart, it's probably somewhere around there, right? price came up through, back down, tested it, it held. That's now a legitimate floor. Went away, came back, it's held. Pushed away again. So that's your floor. Let's look at the ceiling. And the ceiling is, again, quite easy. You just go to the highest, we call them swing points, the highest point in the chart before it reversed down. So that is your ultimate swing high there. Alright, we'll make that red. We have a secondary through here. Now remember, this is a weekly chart, so these candles take a while and they're pretty important. So every time it comes back to this green area on a weekly chart, until it breaks, you're looking to buy. And every time it comes up to these red lines, if it doesn't break, you're looking to short until the market tells you otherwise. Let's look at what would tell you otherwise. So if I took it back to if I rewind time and take it back to here, this here could be considered a floor point, couldn't it? Market came up, came down, tested it, moved away. Came down close to it, but it's moved away. So we're looking here, we're thinking, fuck, that looks alright. That looks alright to buy there. I might be interested in that. Let's see how price interacts with it as it comes back to it. Now, a failure of a level will be a candle close through it, and we get a great example in a couple of candles time. Watching. Oh, we tested it again. There's another buy opportunity. Oh, see, we went through the level and closed back above. We might be looking to long that, like buy that area, but on the next candle, we get a close through it, which invalidates that level. It's not a clear level anymore. I don't want to see that. I don't want to play with it. I don't want to be a part of it. There we go. So candle close through the level means that the level is no longer valid, but you're not looking to long that. Once a candle is closed through your level, you're not looking to long that. Get out of that. Right, here's an excellent example of a consolidation period on gold, US dollar. And how you would have, how you could have traded it. So each bar is a week. We spent 2,198 days in this consolidation period on gold. It's a long time. Markets can consolidate for a long time. It's a weekly chart, remember, on a daily chart. But I mean, there's ample opportunities for downtrends here. You can see you're making lower highs all the way down. So maybe you would have shorted that for an excellent trade on gold. But anyway, she's a bit rough with closing through the level. And now you can move your lines to suit your chart. Like, you're going to have to. Nothing's ever clean with trading. Like, if you've done that, it came down through the level. We made a little resistance area here. We had 1, 2, 3, 4 weeks failing to close through that level, and a big sell-off. We have an initial support here. We come up back to this level. We get a candle 1, 2, 3 closes above it, but they're really wicky, and the wicks, especially on this candle here, zoom in, tell us that price was up here at some point but came back down. So that tells us that buyers tried to push this price up to here, but sellers overtook them and pushed it back down for a bearish close. Now you could adjust your line up to suit that if you wanted to. That's a swing failure pattern on this area and this candle. So that's a pretty good entry for a trade right there, and you would be targeting this low again on the weekly time frame. So on a weekly time frame, entry on next candle open, probably looking above there somewhere. Weekly time frame, that's a 5-hour trade that takes 119 days to play out. So this is why you don't trade the weekly chart. You can use the weekly chart for support and resistance, but you would go down the lower time frames. At a lower time frame, you will be looking at this wick level here, highest wick there. Let's go down to the daily and see what that looks like. Oh, perfect. Pin bar, entry, swing failure pattern. It failed to close above the last swing high point and the last candle, and it's a pin bar. That's, for me, right, that's a trade I would take every day of the week. Enter on the candle close, stop above there, and we're targeting that bottom again. Now all of a sudden we've gone from weekly to daily, and we've turned a 5-hour trade into a 7-hour trade. Doesn't sound like much if you're on your $10,000 account. It's only $700. Like, it's nothing to be sneezed at, but for, you know, nearly a third of the year, it's you want your money to work harder for you than that. So, but on an account with, you know, $500,000, that's massive. That's a massive move. The big boys are playing with big money, so they'll sit in that. But I'm digressing away from support and resistance and going into more trading. But go back to the weekly time frame. It works on all time frames, as we just seen. We have the initial support, so you'd be buying this dotted line, every touch on this dotted line, until we get a close underneath it. That dotted line, not support anymore, is it? We've closed lower. Now we're looking at this line as our support. Oh, we probably move it up to there. You just move your support lower each time, because you're looking at the furthest swing point. And after we get a big close below, comes back and retests the level, moves away, I'll be short there, because that's the down the stairs to the next floor, up, hit the ceiling, and we're gone. I would have been stopped out, but you don't win every trade. Like, it wouldn't be called trading, it'd be called winning if you want everything. Like, fucking hell. This is a common pattern among consolidation periods. It will have a big fake out to the downside here, often referred to in the Wyckoff methodology as the spring. It comes down, big dip below the support, comes up, and if you reclaim this previous support holds on the next test, it's probably going to go up. Same in reverse. If you inverse the chart, if we had a deviation or a spring from resistance up here, move back in, tested that level, it's probably going to go down that way. Okay, it's probably going down further. So there's a massive consolidation with plenty of support and resistance trades in there. And after it breaks, remember this is a weekly chart, so we've broken higher first week. We come back in but stay higher second week on this red bar. Close higher again, move away. So we're now 4 weeks, we retest that previous resistance, which is now support. We have a clear close away from resistance, which is now support, and we retest again on this. That there would be your entry, right, for a massive gold long. Under there is your stop, and you would still be in that trade. You know, if it was me, I'm probably out of the trade around this candle, maybe even higher, maybe about there. It's a 19.44R trade. That's massive, alright? Massive. It works. Support and resistance works. Gives you another entry here. The high of the break comes back below, tests the floor, which used to be the roof here. Red line used to be the roof. Is now support. Closes back above that resistance. Retests it. There's an even better entry. Right. So you missed that one, or you're not too sure about it. Look at, like, where you take profit is up to you, and where you move your stop is up to you. I'll give you some pointers further on in the series, but support and resistance, especially on macro time frames, weekly, daily, can give you some amazing trades, especially if you use lower time frame and higher time frame confluence. So making sure that we can get a tighter entry on the daily chart if we're looking to hold a big weekly position. So it all works together. Support and resistance is the king to trading. Anyone that trades with moving averages will use support and resistance. Let's have a look at a moving average. Is just the average of, there you go, the last 9 candles. It averages it out and prints the average for you. So people will be a moving average trader and will say, you know, it was resistance here, so I shorted. It was support here on this candle, so I longed. Support and resistance is king. It's where price rejects from, pretty much, whether up or down. Eth USD has another excellent support and resistance flip here. Happens a couple of times. Alright, we come up, roof, resistance. I've made it orange because it stands out more as a support resistance flip. Come down and put in an initial floor. We come back up. We hit the roof again, still resistance. But we can see we have an uptrend. It's getting pinched towards the roof and it explodes up. It has its blow off top. It comes back down. Where does it stop? Where does it reject from for its bounce? Pardon me. It bounces off the previous roof turns into a floor. We get a good bounce. That's a good trade there, you know. Again, we're on the weekly time frame, so you'd be trading spot. 11.5 R. Great trade. And let's look at where it rejects from. A previous high time frame support. That's where price bounced from. There. We had a red down candle, another red down candle, which a small one with big wicks on either side, indecision candle or doji. We had a small bounce, we tested it, another close above, and we finally lost it. There's another great trade. You would have flipped short there. We come back down into our consolidation period. We've left our orange line there still because we got one trade, two trades out of it. Still there. We finally find a floor here. We come back up and we retest the roof. We test the floor again. We come back up. We push through the roof, close back below it, and finally take off again. Right, and the last touch before it takes off is our orange line here. So support and resistance trading works. You need to give yourself room, especially on macro time frames like this. Like if you entered long here because we finally got a close above, you'd be stopped out, because a lot of people, once we get a close above resistance, they will long that and they will stick their stops below the last thrust candle, the last up candle before the close through. And we can see it got wicked out because that's what everybody's taught, that's what everybody knows. So what I've been taught is the previous swing high before going out, you want the thrust candle below that. And it hasn't topped out since. Well, it did up there, but you know, you would have moved your stop up below these big green thrust candles. That's the safe spot, and on a weekly time frame to keep your stop below. That's another 16R trade. So macro time frame, support and resistance gives you excellent trades still, especially if you're trading spot. Right? We've seen support and resistance trading within our range here, and again on gold I went through it. You have initial support, the support is broken, we find a secondary support there, it gets broken but found again and tested and respected, and up we go. You can do the same with the resistance. You would say, especially after this test, right, this test, you're looking at the last swing high for your resistance level. That's where you're looking to take your profit. You're going from this level up to the dotted line. Swing points, that's what we're looking for. Swing highs, swing lows. Swing low, swing high. Swing low. Do we break above our swing high? No. So that's still the swing high there. We get another, that's the highest swing high. Another swing low, swing high, swing low, and we break up. That's now your swing high. That's now your swing low. Swing high, swing low. And now you can tell you're in an uptrend because you're getting higher lows, low, higher low, higher low, higher low, and you're getting higher highs, a high, a higher high, higher high. Follow it up, we put the line chart on. Does that make it easier to trade for you? definitely. The swing points are the highest and lowest points on the line. Alright? That's pretty simple with support and resistance trading. I think that's it. That's it for today. Thanks, guys. Hope you learned something.